Good morning, everybody. Welcome to Friday and to the Rebel Income live stream. As always, I'm looking forward to the session and excited for those who are here. And hopefully, we'll get a few more coming in as we get things rolling. But as always, there's plenty to talk about. Market's just getting started for Friday. As kind of the nice thing since we adjusted to the current time is we're off and running the same time the market is. So we kind of get to see things unfold during the first hour of trading. It's kind of fun. Um, Really quickly, one item just by way of housekeeping for those of you that are on Discord. Please do send me. You can email me at rebelincomesystem@gmail.com or drop me a direct message in Discord. I do want to make sure to get everybody transitioned and moved over to Substack as soon as possible. I've gotten a couple of you who have sent me your information, but I really need everybody that is on Discord to do that. I am not going to be shutting off Discord anytime soon. I'm going to continue to run that and maintain that for the time being. But there will be a point where I will likely discontinue using that discontinue using that platform and focus primarily on Substack. So if you still want to continue to see Rebel Income content, participate in this live stream, then you're definitely going to want to make sure that you send me that information. Okay, with that said, appreciate your time and your attention. As always, it's Friday. That means that there are options that are set for expiry today. It is the second Friday of June, and so that means that the options that are expiring today are weekly options. So we've got a lot to talk about. There's a number of open positions that we'll be reviewing today. We may have some time to go over some of the stocks that you're interested in as well. Um, Maybe we can get an update on NVDL from Barry and see how that's been going, um, or others, whatever other stocks you're interested in. We may even have some time to go through and do a sample Rebel Income analysis on a stock that maybe you have been following and would like to get a look at on have me look at it from that apply that Rebel Income lens to it. So we'll see how we are time wise. Well, let's go ahead and dive straight in and just talk about some of the currently open positions based on what I've been publishing on in Rebel Income. As you can see, there's a number of open positions right now. Most of them are set for expiry in the next 2 to 3 weeks. There's only one that is set for expiry today, and that is a covered call on FCX, which you can see right here. And that one is, this is a stock that I was assigned back in April at $40. And so I've been holding that stock. Which has been useful. Let me go ahead and take a look here at the stock chart. Took in one dividend on this at 15 cents, and it initially had dropped pretty seriously. Change my colors here on my writing tool. After I was assigned, it went up here a little bit, and then it dropped all the way down, came down to about $28 as the rest of the market kind of went through a temporary freak out based on tariffs. And since then, it's managed to recover a little bit. Love my wonderful, beautiful lines here, but we've seen it start to show some strength, even with this little pullback the last 4 sessions. This is within the context of an upward trend, which we have since this bottom in April. This does look like it could be a very normal retracement within that trend. And the stock does look to be finding support here around the 40.55 level, perhaps, and showing some strength, even though it's down relative to where it started yesterday. where it closed, excuse me, yesterday, we could still see that the overall candle here is still a bullish one. So it looks like this is starting to show some support right here around 40.50. And that is very interesting for my covered call. I was assigned, as I mentioned, at 40 here. And my covered call, I had one that I was able to set for the middle part of May. And then this latest covered call came shortly after that with a $40.50 strike price. So the stock is sitting right on my strike price right now. Now, again, we're in only the first few minutes of the day, so exactly where is that going to settle today? That's a little bit of a, well, let's face it, it's not a little bit, it's all of a guess. We haven't seen enough activity here in the stock yet to really determine if this is going to hold or not. So 50-50, I could be called out of this position. The option may still expire worthless, depending on what happens over the course of the rest of the day. This was a very productive trade, though, bringing in almost 3% for a 9-day trade. This was a very nice premium based on the covered call alone, bringing in $1.10 on that position. So would I like to be called out? Sure. This would free up the $4,000 I put in reserve on this trade. I only sold one contract, so 100 shares at $40, that's $4,000. So it'd free that up and allow me to redeploy it, decide what else I want to do. And it's always a good thing to have a little bit more dry powder on your account, especially when the market continues to be a little bit uncertain right now. But even if I don't, FCX is a stock that I really like. As I mentioned, I've enjoyed holding it even just through the downturn. That was not something that was fundamentally driven by any real problems with the company. That was really just based on reaction to tariffs. Now, that doesn't mean the stock couldn't continue to be volatile with the rest of the market, but the fundamentals are really solid, and everything is in place for FCX that it needs to be in order for me to justify holding on to it as a continued position if, in fact, the option expires worthless. Really quickly, though, let's go ahead and just check in on the options for this. Good morning, Jay. Yeah, FCX has been good. I appreciate that. I'm glad you feel the same way. Okay. Now remember, I brought in on this one $1.10 on my premium. If anybody else wants to compare notes, maybe did a little bit better than me, that's cool. I always like seeing that. But for reference, the main reason I'm showing this, not to brag, but to contrast it against what's happening with this contract right now. Let's see, actually, that's the put sell. So we need to move over here. Here's the call at 40.50. The ask on this, well, it just jumped up. It was 39 cents. It just went to 54. Let's take a look at the details for the contract. Okay, and it just readjusted again to 40. So that was a temporary thing. Okay, so with this is interesting because let's suppose, and maybe your viewpoint of this is a little bit different than mine. And maybe it's not about trying to allow yourself to get called out. Stocks dropped down a little bit since then, which is interesting. There's 40.52 on it right now. Maybe you're looking at this retracement here against this upward trend, and you're saying, you know what? We're right near the 20-day moving average, a little bit below the 200-day. But if this is a really good trend, if this is a valid trend, what should happen? We should see a bounce, see the stock go higher. And in fact, with resistance right here, a little bit above 42, I'll call that 42.50. If this trend is really valid, not only should it bounce, but it should also push above that 42.50 level. That's what it's going to take in order for what is right now still a short-term trend on the verge of transitioning to an intermediate trend. In order for that transition to happen, we're going to have to see it break 42.50. It doesn't mean it has to happen right away. It could take a week or so for that to happen, but ultimately that's the case. So if you like FCX and Jay, you sold you sold 42.50, so you went at that resistance level, which is awesome. You've baked in a little bit more capital gain than I have, so a little bit more bullish perspective than mine, which is fine. I usually go with a very near strike price, just to try to maximize the income and let happen what's going to happen. But if we get this break, that would confirm this trend. We will see that extend into a longer time period, which should make the trend even more sustainable, and could certainly start to see it get up to these levels in that case above 50, which would be really, really nice. If that's your perspective, and maybe that's what you're looking for out of SCX, then it would probably make sense to think about buying this option back. Just in the few minutes we've been talking, here's the asking price has dropped down to 38. So if I sold at $1.10, and now I could buy it back at 38. I'm going to have to do elementary style math here. Here's 10. Okay, 2 and 7. Yeah. So to be able to hang on to 72 cents of the $1.10 that I have that I brought in so far. Jay's been selling calls for weeks on it, so you've been paying yourself dividends for a long time on this, which is great. I love it. Here's what would happen if I bought this back. I'd still have 0.72 on. Again, this was about a 9-day trade. 1.8% on a very short-term trade. This was, let's see, covered call. Yeah, 9-day trade, 1.8%. If I bought that back, that would not be terrible. It would allow me to hang on to that position. It would immediately remove the obligation associated with being called out, and put me in a position where I could continue to ride that upward trend. Now, I'm not saying that that the bullish scenario that I've painted is going to be what I think happens. I'm not sure. What we're seeing from a technical standpoint, besides this nice upward trend. All right, I need to get a hold of myself here. There we go. Besides this nice upward trend, is also a narrowing of the distance between the 200 and the 20-day moving average. So what we have forming here is what a lot of technical traders like to call a pennant formation. What happens in a pennant formation? Well, the more the distance between support and resistance levels in a pennant narrows, the more the less volatile the stock typically gets in the very, very near term. That means that you start to see a little bit of consolidation in most cases, at least on a temporary basis. It's kind of like I often compare this to a coil, and the tighter these ranges get, it's more like you're taking the coil and you're tightening it even more. If you have a slinky, if you play with, I give my grandkids things like slinkies to play with. If I tighten that slinky as much tight as I can, when I let go of it, it's going to spring back to its original shape. It's going to do that with a lot of energy. What that means then is that at some point, the tighter this gets, and it's getting pretty tight now, the tighter this range gets, the more likely it is to spring back, the more likely it is to release that pent up energy. In most cases, the direction of that release, for lack of a better word, that break is usually in the direction of the longer trend. So I would normally anticipate that would be in this direction. That's the normal expectation. Of course, there is always the possibility that it could also spring back in this direction. So we really don't know just yet. This was an interesting case here in March, where we were seeing FCX really showing some very, very impressive near-term strength, and then look just even more quickly how far it fell. Again, my lines are ugly, so I apologize, but this is a good example of where a lot of people would have been looking for a break above and a continuation. Even at this point, a lot of people would have been looking for a break and a push and a rally higher, and it didn't happen. So there's a lot of things that could change the perspective on this. That's why whether it breaks above or whether it breaks below is anybody's guess. It's also the reason that I'm very content and very willing to let whatever happens with this happen for me. At 40.54 now, it looks like if this price holds, then I will be called out, and that's fine. Jay's been selling he sold the 42.50, so it looks like you're probably going to be hanging on to it. But that's, again, if you're okay with that, there's nothing wrong with it. And certainly, I do like the idea that you're able to bake in even more of a gain on the stock if you do get called out than what I have done. So that's pretty cool. I like that variation. Okay. The other opportunity here, it may be, if I am called out on Friday or today, excuse me, is, next week, who knows? Maybe there'll be an opportunity to go back in again on Freeport and set up another, and use it again for my next put sell, and just keep that income machine going with this stock. There's nothing wrong with that. The stock is around the same price it was at when I did my first put sale, and that means about the same conditions as what I did before. Possibly the same kind of opportunity. That's nice. I like that. That gives me something I can use. So I'm not saying I'm going to use it next week if I am called out, but it is a possibility. We'll just have to see what happens. Barry and Jay, you're kind of on the same page here. You're going to let your 42 call expire today, barring a one-day rally, and then start looking again for opportunities next week. Love it. That's awesome. There are so many different ways to approach these kinds of situations. Jay just rolled down, went from 42.50 to 41. So you narrowed the distance a little bit, brought in some more income, right? Nothing wrong with that. 1 week out. Okay, let's take a look at your numbers. 41.50 over here. Okay. So right now it's at 56 on the bid. So I'm guessing, okay, you got 38. But 1 week, let's keep that in perspective. Don't go, you only got 38 cents. Here's 38 cents. Jay, were you assigned at 40? I'm just going to operate, I had to buy back right. Let's say 38 cents. Okay. 41.76 is where you bought the stock at. Totally fine. So a little over 0.9%, not quite 1% on this, right? Barry, thank you for the NVDL update. Got called out and waiting for a better opportunity. Nothing wrong with that. Jay's break even is down to 39. Well, then I'm going to use that. That's where your cost basis is now, right? 38, oops, 0.38 divided by 39. 0.974. So almost 1%. Again, 1 week. So let's multiply that by 52. Assume you could do that every single week. That's a little over 50%. You're just taking taking 3 or 4 dimes every week per share per contract. I mean, how can you not like that? If this is math that you don't think you can get on board with, then clearly income generation, selling call and put options is not for you. Barry, you're right. If only the market would cooperate. You're not going to get the same result every week. So these are ideal. Yes, these are idealized numbers, but this does give you a pretty good idea of what is possible and even practical. And even if the numbers are a little bit idealized, they're also really not all that far off. Okay, awesome. Thank you, guys. Appreciate that. Okay, so that's FCX. Let's talk about next week. There's a few different trades that are coming up on next Friday, and so with a week to expiration, it's kind of a good opportunity to kind of see where things sit there and see if we're getting movement on those stocks that might make some different possibilities available. Very like all things in life, when there is only hope. Amen, brother. I will agree with you there. Let's start with SWK, not to be confused with Skyworks. SWKS. This is, oops, I can type SWK. Stanley Black & Decker. All right, sitting a little bit below $66 right now. And we are seeing, excuse me. Oh, I apologize. We are seeing a little bit of a fade back in the last couple of days. Stock is at the bottom of its range right now for the day, off about 2%. But relative to my trade, excuse me. Relative to my trade, though, I was in this at 62.50. Which gives me a pretty good cushion from where the stock is now into next week. I brought in $1.20 on this. So with the stock where it is right now, a little below 65, this could open up an interesting opportunity. I've held this for a couple of weeks now. We're about a week to expiration. So let's see where things sit on this one right now. Again, if any of you are in Skyward, or excuse me, Stanley Black & Decker, I would appreciate seeing what your numbers are like here as well. All right. So this is one that only offers monthly options. Again, for reference, I brought in $1.20. The current asking price on the 62.50 is 45 cents. So that's interesting. This is positive. If I wanted to buy this back, remove that obligation, this is what it would cost me right now. And that would leave me 75 cents. In net credit. Little over 1% for 2 weeks, which is not bad. I would still be able to capture more than 50% of the premium that I brought in, and then I could, if I wanted to, I could think about whether or not to roll up to 65 here. $1 on the bid. This is a little bit in the money, so this might be a little bit of a well. It's actually I apologize. That's out of the money, so this would probably not be a terrible trade right now, especially if current support holds. It looks like it's trying to find it right around this current price. If it does, that could be interesting. Let's look at the open interest on this. All right, so plenty of open interest, even enough volume on this. I'm a little surprised that the difference between the bid and the ask, given the amount of activity on this one. But you could probably all the trades for this one have been right at 35. I'm willing to bet that you could put, if you wanted to, if you're in this, you wanted to put in a buy to close right now at 40 cents, you would probably be able to get it. You might have to wait for the market to come to you, but it looks like that, if I had to guess, if that would probably happen. There's enough bearish momentum on this that I think that likelihood is improved. Excuse me a moment. Now, the caveat to trying to roll this is that since this is a stock that doesn't offer weekly options, you are still working with either the 7-day contract, or if you're willing to factor in a little bit more time, then you need to be looking at the July week 3 options. Now, in that case, you're looking, this is, I'll be honest, this is not a terrible net yield at $1.20 for the 6250 July week 3 contract. But given the distance here between these two, between the bid and the ask price, doesn't look like there's going to be a lot of activity here. Yeah. There's been no volume. There's adequate open interest here. So if you were to buy back the current contract and then go to sell this one, probably wouldn't want to even try to change the bid price. Excuse me. Summer allergies. So this $1.20 would be useful, but if this were a trade I wanted to make after I had bought back the June contract, I would probably just want to go at 120 and not worry about the difference here between these two. This is a 65-cent difference, though, so I don't love that. But that's something to think about. Okay. Anybody else? Any other thoughts on Stanley Black & Decker? You may have chosen not to take this trade just because of the fact that it doesn't have weekly options, and that's fine too. I don't mind working with Barry. I take Xyzal every day for that. So do I. So this is even with my Xyzal. This is still what I get to deal with. I apologize for sneezing right into the microphone. Okay. If you have some comparable numbers for Stanley Black & Decker, feel free to share them. If not, we can certainly move on. All right. Our next one is a stock that you've seen me work with in the past. This is Pfizer. Again, this is a trade I placed at the beginning of the month of June, and I've been in it for basically just 1 week. This was last week's put sale, the 23.50 strike price. I just, in the interest of transparency and clarity, I do own this stock up in the $50 range as well. So for me, this position was a couple of things. Number one, a good opportunity to generate income on a stock at a deeply, deeply discounted price at $23.50. If you don't already own shares in this, this was a very interesting trade. Brought in about 2.13%. The second part of it is it's also an opportunity. If I do end up being assigned here, gives me an opportunity to average my net cost down. All right. So let's take a look at where Pfizer is sitting right now. Remember, I sold the 23.50, and the stock is showing some nice momentum here. Apologize. Stock is showing some very bullish momentum, even with a little bit of a retracement today. A little bit of a fade in momentum. So this is looking like it's in a very, very good position. A little over $1.50 away from the strike price that I sold. So let's check in with that contract. We do have weekly options here, which is awesome. And so just for reference here, I brought in 50 cents on this one. And at 23.50, oops. I don't know why I went to the arrow, but okay. The ask on this is 7 cents. So that means that I could, if I wanted to buy this back for whatever reason, I could right now, and I would be able to hang on to 43 cents out of the 50 that I brought in. So more than 80% of the premium that I brought in when I sold, I'd be able to hang on to it now and think about whether to roll and try again. Again, this isn't a recommendation to buy or sell, blah, 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 blah. But with the stock now a little bit below 25, there are some interesting choices to be made. The asking price, the bid price for the 24.50 going out an extra week is 36. So that's about 1.5% for an extra week of time. So let's take a look at this. 0.36 divided by 24.50. 1.46%. Again, I remember with if you look at my trades and my trading history, I often try to get about 1.5% per trade, but that's not actually my target. If I can get that, that's awesome. But what my real average target that I'm really shooting for is about 1.5% per month. So this is a little under 1.5% for 2 weeks. So this is well within the target that I'm looking for, especially if you think about it on an annualized basis. Again, these are idealized numbers, but if I could do it every 2 weeks this way, over 26 trades, that averages out to about 38.2%. And that's not counting what I hang on to, the 43 cents from the put sale that I have now, right? We're talking about ultimately between the two, 43 plus 36. There would be the net credit so far if I were to place this trade, if I were to buy back the 23.50, go out one more week of time, sell the 24.50, my net credit in that case would be 79 cents. And let's move up our price to 24.50. And the annualized result becomes about 32% over an entire year. That's not bad. That's pretty good, in fact. And that's just what's possible on a stock that I've only been in for about 10 days, 9 days maybe. I'm just going to bring my Kleenexes closer. All right. Again, if you want to compare numbers on Pfizer, if you're you're in the trade as well. Let's go ahead and share them, and let's see where see where you stand. If you have a different idea about this one, you don't want to do it at all, that's okay too. I certainly don't expect you to place all of the trades I'm placing. If you're like Barry, you're placing trades I'm not paying attention to, like NVDL, when the opportunity is right, right? And that's awesome too. So, okay, the last trade for next week that's on deck is a covered call on Schlumberger. Now, this is one that I was able to get after being assigned last week on Schlumberger at 34. I was able to sell the 35.50 strike price, setting up a nice little capital gain if I get called out next week. Brought in a little over 2% for a 1 week trade here. 9 days is when I placed this on Wednesday. So let's see where we are with Schlumberger. See how that one's doing with some of the recent news here. Yeah, we're seeing a little bit of a spike in energy prices. With the news about Israel and Iran. Very nice trade. Give yourself more. Okay, I will. Thank you very much. Appreciate that. 35.95. Again, I was assigned on this one at 34. Now it's certainly not a given that this momentum is going to continue, but so far it looks like in a pretty nice spot. And even if this thing does fade back, if we do see a retracement here, and I do, and let's say next week it's below 35.50, that's okay. 34 looks like a very strong support level here. The 20-day moving average is right in this level, and it's starting to flatten out. So 34 looks like very strong support. And this is a stock that is clearly in a consolidation period here. In fact, let me redraw this line. This looks like this could be a pivot low, or excuse me, this could be a pivot high right now. Whoop, whoop, something like this. Right off of the top end of this previous resistance at right around 36. If that's the case, then we're likely to see this continue to consolidate. This could possibly drop back down below my $34 strike price and down to 33. I'm okay with this, because even though that would mean my covered call would probably expire worthless, it would also very likely set up an opportunity for another covered call not too far down the road. I really bullish traders really don't like working with stocks that are in the middle of these long downward trends. But these consolidation ranges, what we have here, these are really, really useful for income generation. We can really make a lot of hay with this kind of activity. And every stock that isn't in downward trend at some point experiences these consolidation periods. Now, it is true that they don't always hold. This one here at the beginning of the year for Schlumberger was also looking pretty good. And then it didn't, right? It broke down again. So it's not a given that they're always going to hold or yield a reversal to the upside. But while the consolidation is happening, there's a lot of opportunity here. And if you're approaching the trades that you're making with a conservative bias, especially as it relates to position sizing. Bang, there goes my position sizing drum again. Then these become a lot easier to manage, even if you do get something where it drops down out of that consolidation range and has to go find a new one. So for the time being, this is looking pretty nice. We'll see where this ultimately shakes out. It could still even break above this range, right? And we could see it rally closer up towards 39, where it looks like the 200-day moving average is waiting. So we'll see. In the near term, though, I like this trade. It's working out okay. All right. The only other trades here that are coming up were this week's put sale on CVS, selling the $64 strike price, and then a covered call I was able to place on Barrick Gold. Now it's actually Barrick Mining Company. Now they changed the symbol to B from gold, but this is another one that was I'm in it at around $20, and so this was an opportunity to set up a nice covered call here. So I did that. Also, let's go ahead and take a look at the put sale on CVS. All right. Here's CVS showing some nice bullish momentum for the last couple of weeks. And so with having sold the 64, it looks like this is in a pretty positive position. I've got a couple of weeks to expiration. So let's take a look here. Here's June 27th. 64 asking price on this is 54 cents. So not enough to really try to do anything with yet. Excuse me. Let me rephrase. I brought in $1.20. Here's how's this for a 2-day result, guys? Some of our friends in the ITG group will be screaming at me right now. Brought in $1.20. And here is the asking price on this. Probably not a lot of activity going on this contract right now, but let's see, be able to hang on to more than 50% of the premium right now after only 2 days. Now, you're not going to be able to do 1% every 2 days on a frequent basis. But this is kind of a layup, isn't it? Buying this back and then maybe rolling up with the stock starting to approach 67. Here's maybe the 72 or the 66. There's $1.05. Staying with the same expiration, just rolling up a little bit. It's not the worst idea. If you wanted to go out a little bit further in time, there's 92 for the 65, $1.25 for the 66. This is the advantage that sometimes momentum gives you if the stock is really moving in your favor, is you can start using your selling strategies kind of like momentum trading, right? And that's kind of one of the things that if you are a more aggressive put seller, if you're managing your trades more actively, what I like to call a roller, this is what that kind of sets up, is an opportunity to kind of be a little bit of a momentum seller. Makes you a little bit more aggressive, so you are going to have a few more losing trades in that case, but also when it works, when the momentum is going in your favor, gives you a pretty strong mark. So it's pretty interesting. Okay, that's pretty much all the trades that I had for the day, and pretty much everything I have on deck right now. So let's open this up a little bit. Let's look at some stocks that you're interested in. Barry, you mentioned that you're not doing anything with NVDL right now. I'm just, for the sake of closing the loop, since I opened it, let's just take a look at it here now. Interesting. 20-day moving average here is starting to bend over a little bit. It's not, when I say bend over, not down, but it is starting to flatten where it had been going. It had been, the slope on this was very clearly and aggressively up. We're starting to see that flatten out a little bit as the stock has topped and kind of coming down a little bit. The momentum here has faded a little bit just in the last week. Kind of seen it just holding in this narrow range. Got a similar kind of a wedge here forming, don't you? Here's your 200-day moving average, which is very flat. And then the 20-day moving average, it's still going up even if it's flattening a little bit. It's just not as sharp. But we're starting to get that pennant kind of a formation. And look at these candlesticks. This is very much, let me zoom in on this a little bit. I'm not saying there's a trade here yet for you, but just the range here in the last few days, a little over a week really, it's just kind of been holding in the same basic range. If there's any kind of a significant bounce, I would probably, again, I'm not making a recommendation here for a specific trade, but if you want to talk about signal points, this top end resistance at $60 is something to pay attention to if you're interested in trading this. A break above 60, I would take as a bullish signal. Barry, the only other trade that you have is HPE. Expires today with a $16 put. Brought in 27 cents, made on May 27th. Okay. Oh, wow. Yeah. You've got nice momentum on this one. Good trade. Hewlett Packard Enterprise, one of the kind of underappreciated players in the cloud business. So, Jay, thank you for your time. Appreciate it. Barry, don't typically start selling puts on NVDL until you can get a good premium on strikes for $50 or less. So you would need it to break down a little bit more. and that's fine too. Nothing wrong with that. All right. Really quickly, Jay, if you can hold on for just 1 second. Well, he's already gone. So we'll table that conversation for next week. There are going to be some things that I want to consider um, in terms of the future of this live stream and modifying the format a little bit. But we can have that conversation hopefully when a few more people are here for the live stream in another week or so. So. In the meantime, everybody, thank you for your time. I'm going to go ahead and take a cue from Jay and give you back a little bit of time. But I do appreciate your involvement, participation as always, and hope you have a wonderful week. If anything comes up, don't hesitate to let me know. rebelincomesystem@gmail.com is my email address, or reach out to me directly in Substack or Discord. Otherwise, we'll talk again next time. Thanks. See ya.